All right. Good evening, everyone. My name is Leroy Phillips, and I will be your presenter this evening. This evening, we'll be doing part three of corrective formations, and this evening's topic will be the head and shoulders pattern. I know it's a very common pattern, and some of you may have already um, encountered the head and shoulders formation. Okay. So before we jump into this evening's presentation, please be sure review our disclaimer. Just scroll back to our disclaimer here. Review our disclaimer. Also, be sure to read our disclaimers and terms and conditions on the Unit of Prosperity website. Okay, let's jump into this evening's class. Remember, we're not financial advisors. We are only here for educational purposes. Okay, so everything we do here is for educational purposes. We are not financial advisors. So let's go back to the head and shoulders formation. All right. So let me know how many of you have encountered the head and shoulders formation. Just give me a I in the chat box if you've encountered the head and shoulders formation. Okay. I see some eyes are coming in. That's good. All right. Wonderful. Okay, so the head and shoulders formation. So what is a head and shoulders pattern? A head and shoulders pattern is a chart formation that appears as a baseline with three peaks. And most of you are familiar with it. So it has three peaks. The outside two are close in height, and the middle is the highest. And the middle is what we consider to be the head, whilst we look at the outside two as the right shoulder and the left shoulder. Okay? In technical analysis, a head and shoulder pattern describes a specific chart formation that predicts a bullish to bearish trend reversal. Normally, whenever you see a head and shoulders formation, it's going to be telling you that the bull market is coming to an end. But it could also indicate to you that the bear market is coming to an end. Okay? Now, the head and shoulders patterns is believed to be one of the most reliable trend reversal patterns. It is one of several ending patterns that signal with varying degrees of accuracy. And when I say varying degrees of accuracy, I mean, in times you may get a little move out of it, sometimes you get a big move out of it, and that's what we mean by varying degrees of accuracy. Okay? Now, it basically lets you know that a trend is nearing its end. What most traders don't understand about the head and shoulders pattern is that it is not only a reversal pattern, but it can also be a continuation pattern based on its internal wave construction. Now, if you're one who understands the Elliott wave theory, you would be able to go into a head and shoulders pattern and dissect it. Okay? Now, how do we trade the head and shoulders pattern? To trade the head and shoulders pattern, what we want to do is wait for the right shoulder to break the baseline, also known as the neckline. Okay? Once we get a close below or a close above, based on what pattern you're looking at, if you're looking at a bearish pattern, you're looking for a break below, break and close below. If you're looking at a bullish pattern, you're looking at a break and close above the neckline or the baseline, whichever you'd like to refer to it as. Okay? Now, to add a degree of accuracy to your trade, what we would want to understand is what Elliott wave pattern built the right shoulder. So, was the right shoulder built by a triangle? If the right shoulder was built by a triangle, that would indicate that we are only in a correction. Why? Because a triangle is generally found in a B wave of a zigzag. So it's generally going to be a three-wave corrective formation. So you're going to get a little move down, and then the price is going to move in the opposite direction because it's just a correction. Okay? And I'll go more into that with you as we go along. We also need to we need to also look out for flat pattern formations in the right shoulder. When you find a flat pattern formation in your right shoulder, you could already think that your head and shoulders right shoulder is already complete, and you jump into your trade. When you jump into the trade, the price then pulls back, stops you out, because generally your stop is going to be just above that right shoulder. So it's going to come back and stop you out, then drop in your favor. So you need to understand what Elliott wave formation is building your head and shoulders right shoulder. Okay, if you understand the different Elliott wave corrective formations, they will help you a great deal in identifying and taking a good trade on the head and shoulders formation. Now, one of the best head and shoulders patterns to trade is one where the right shoulder is a flag. When I say a flag, I'm talking about the right shoulder just ranging. It's just going sideways. It's going flat. Okay? Or it could be, it could be ranging and slanting to the upside. That would be considered a bear flag. So it could be creating a bear flag. It could be going flat. It could be going in a flat pattern formation. That could also indicate to you that you're going to get a very strong move coming. Okay. So generally, whenever we find a flag correction or the price is just ranging in the right shoulder of a head and shoulders formation, generally we get a very strong breakout. Okay. So that's something that you would want to look out for. So what does the head and shoulders pattern actually look like? This is what the head and shoulders pattern looks like. So this was a bullish market. So the price is trending up. It makes a peak, comes down, makes a higher low, goes up, makes a higher high, comes down. It's either going to be a equal low or a higher low, or it could be a lower low before it makes the next lower high. Okay. Now this shoulder is what we're talking about. This is the right shoulder right here. This one, you could see that it's an aggressive move. And typically when you find this type of aggressive move, this is not going to be a head and shoulders formation that is generally just going to close below and continue moving down. It may close below the neckline or the baseline and then come back, break that high. And if it comes back and breaks that high, it could be this right shoulder could be an expanded flat pattern formation. Okay, and if it's an expanded flat pattern formation and you have a stop right above here, it can come back, hit that stop, you're stopped out, then go down in your favor. So you need to understand what Elliott wave formation is building your right shoulder. Okay? All right. So let's take it to our charts and let's look for some head and shoulders formations. If you guys have access to your charts, and you could also help me to identify some of these head and shoulders formations. Those of you who know what it looks like, you can let me know what chart you're looking at and where you think that you see a head and shoulders formation. Okay? So let's go to our chart, and we're just going to pick any random chart and we're just going to go through it, okay? So let me know if you think you see a head and shoulders formation, or let me know what pair you'd like me to look at so we can search that pair for one or two head and shoulders formations. Right now I'm on gold, and if I'm looking at gold, I can already see that we already have a potential head and shoulders formation right here. Okay, if I just widen this a bit, I'm on the 1 hour time frame, you can see that we have a head and shoulders formation. Now on TradingView, we have a tool that we can use. You can see here that it says head and shoulders. You click that, and we can just simply draw in our shoulder, our head, and this is our right shoulder. Okay, my mouse double clicked. Let me just do this again. Okay. There we are. Much better. Let's make this a bit bigger. And here you can see that we have a head and shoulders formation. Okay. So you can see that we have the neckline here. This is the straight line that you're looking at. And you can see that we have our left shoulder, our head, and we have our right shoulder. Okay. Now, look at how this is playing out. Look at what's happening here. We have price moving up aggressively, and all of this looks like a correction. If you understand the Elliott wave theory, you will know that the last wave up was our impulse. It was not the highest peak, because the next peak that came broke that high. So this is the head in this case is the highest peak. Okay, so that makes this a left shoulder. Now, all of this was happening here is just a correction. So we know that after we complete a impulse wave, we're going to get an ABC type correction. So is this A as in 1, 2, 3? And it looks like that's what we're looking at, right? We're looking at a pullback, a correction, another push down. So this is 1, 2, 3 right here, okay? Because we have this as a three-wave move, it means that this may not continue to the downside. And as you can see, it did not continue to the downside. It just came here and bounced right back up, okay? How do we project profit targets? Let's see here. Normally what we do is from the neckline, from the head to the neckline, we will draw an arrow exactly from the head to the neckline, a nice straight line, and we will take this measurement and project it right here from the neckline, project it down. And that's going to give us an idea of where we can expect our profit target based on the head and shoulders formation. Okay, so that's generally how we project our profit targets. Now, if this is 1, 2, and 3, and the price pushes up again in 3 waves, what will we expect? We'll expect another move to the downside. And we can still trade this again to the downside. As you can see, it came down, it reached our profit target based on the head and shoulders formation. and gave us another bounce to the upside. That means that we're still in a correction because this is 3 down, 3 up. We're expecting 3 down or 5 waves down. Why? Because we're now looking at this entire structure as a flat formation. Okay, that's what's been built here. What's been built is a flat pattern formation. So we can get 3, 3, 5, or 3, 3, 3. Okay, and this more looks like 5 waves. So this could be 3, 3, 5. So if I'm to draw this in using the Elliott wave theory, I can say this is W, X, Y. Let's use yellow. Let's use a different color. Too close to the previous waves. I'll use red. Okay, not sure if that's red. Let's use this color over here. All right, that one's brighter. So this is 3 waves. We can look at this as WXY, or we can look at this as ABC. And we can look at this here as 3 waves as well. Actually, this one is a little bit different. It's like this, right? This is 1, 2, 3, and then we make another wave up. So this is 3 waves here. Let's use a different color. For that B wave, let's use green. And then we're coming down in another 3 waves. All right, we can look at this one here as, we can look at this one as 3 waves as well. Okay, so we came down in another 3 waves. And this is what builds our flat pattern correction, which could also be considered a WXY. According to the Elliott wave theory, this entire wave could be W, X, and Y like that. I'll use yellow in this case, right? So this could just be a big WXY correction, and we start moving to the upside. And this is just to show you how a head and shoulders formation can fall inside of a Elliott wave pattern. And if we understand the Elliott wave patterns, it will help us a great deal in looking at various simple or traditional patterns. Like the head and shoulders formation is more of a traditional pattern. It's also considered to be a simple formation. So using the Elliott wave formations or the Elliott wave corrective patterns, we can identify how best to maneuver these types of trades. Okay? Any questions so far? Anyone has any head and shoulders formations they'd like me to take a look at? Just let me know in the chat box. Anyone with any questions, just give me a yes if you have a question, no if you don't. Okay, Kevin says yes. Kevin has a question. Go ahead, Kevin. If anyone has any head and shoulders formations they'd like me to take a look at, please let me know. Just let me know what chart, what date you're looking at, and I'll go look for it. Just giving Kevin a chance to submit his comment. Okay, so Kimberly says USD CAD has one. Okay. Kevin says, are the distribution and accumulation phases of the Wyckoff model also flat patterns? We can also look at them that way. You see, I have reviewed Wyckoff's work, and it is very similar to the Elliott wave theory. So, as I think I said this to you guys before, I just decided to stick with the Elliott wave theory because, in my view, it was more complete. Okay, it was more complete. So, yes, distribution and accumulation phases, we can look at those and consider them to be patterns as well. Okay, it's just a little bit different with Wyckoff, but I prefer the Elliott wave theory. Okay. Kevin, if you have any examples of the patterns that you're talking about from Wyckoff, you can always you can send them in if you'd like. Let me see here. If you have a screen capture where you can send a link, you can send the links over and I'll open them as well. Okay? So everyone can see. All right. So Kimberly says, let's look at USD CAD. So let's go to USD CAD. What time did you see the head and shoulders formation, Kimberly? And what time frame are you looking at? Just giving Kimberly a chance to let me know what time. Kimberly says right here, 1 hour. Okay. So Kimberly says on the 1 hour time frame. So Kimberly, you're looking at this bottom as a head and shoulders formation. Am I correct? Kimberly says yes. Okay. Excuse me. So Kimberly's looking at this bottom as a potential head and shoulders formation. And let me show you guys what Kimberly sees. I'm assuming that's what Kimberly sees, okay? All right, so I think Kimberly's looking at this as our left shoulder. So this is our left shoulder right here. This is our head right here. This is our right shoulder right here. And this is our projection. Am I correct, Kimberly? Is that what you're looking at? Is this the exact way that you're looking at it? Yes? Okay, Kimberly says yes. Okay, look at this shoulder right here, this right shoulder. This right shoulder is building a Elliott wave flat pattern formation. You guys see this? It's building a flat pattern formation. And this is what we consider to be a running flat. So you can see it breaks the high, it breaks the neckline, sorry. When it breaks and closes above the neckline, we go long. You enter long, it pulls back against you. If this was an expanded flat pattern, it could have extended and broken this shoulder's low. And once it extended and broke the low, it would then go back to the upside. So in a case like that, you would get stopped out. So you need to understand how price moves, okay? If you see it pulls back in a sharp wave to create your right shoulder, it's a sharp wave. Don't rush to get in because when it breaks the high, it's going to pull back again. You can wait for the next pullback, or you can look at that as a retest. Wait for it to pull back again and give you another hint that it's going to move to the upside. Gives you a green candle. You can say, okay, it made a measured move. I got a green candle. I'm going to jump in again. Okay? So don't always be too hasty to jump into a trade when you're looking at a head and shoulders formation. Also, when it comes to the profit target, this is how we project our profit targets with the head and shoulders formation. From the head to the neckline, we project it upwards like this. And this is where our profit target generally will be. Okay? That's how it's traditionally taught. This is how the pattern is traded traditionally. This is how I trade the pattern. I'll show you. I use what I call market geometry, and I measure from the swing low to where I got my, where I completed my head. And I take this measurement and I project it over here at the end of my 3-wave correction. So I would know that this is going to end around this area right here and not expect to reach all the way here. Okay? So this head and shoulder formation, in my view, is over. And we could be looking at price moving to the downside potentially. Or we could be building a bigger correction here. Something like this. We get first pulse down, 1, 2, this will come back as 3, and come back like this again, and then move to the upside, right? Creating another flat corrective formation here to move back to the upside. That is a possibility. For us to decide that we're going to go long, we need to retest the high. If it does not retest the high, then we're not going to be convinced that we could be looking at a potential bullish move. Okay? A retest of the high is good. A retest of the low is also good for downside. A retest of the high is good for upside. And I know that there is a traditional chart pattern that is considered to be a double top or a double bottom. And generally, whenever you see the double top or the double bottom, it means that a double top is going to push the price to the downside. Excuse me. And the double bottom is going to push the price to the upside. It does not necessarily always work out that way. That is a traditional chart pattern, and it does not necessarily play out the same way in every scenario. It all depends on what Elliott wave formation is taking place. So you need to make sure that you look out for the various Elliott wave formations. Let's remove this. And someone gave me another pair that they wanted me to look at. Let's look at GU, pound USD. Where are you? There you are. Okay, so where are you looking at this head and shoulders formation? I can see two possibilities right now. Which one are you looking at? Which one are you looking at? Who was this? Grace? Which one are you looking at? Just give me a time and I'll look at it, or I can show you all that I see. Okay, I'm not getting a response from Grace yet. Okay, Grace says 11th. Let's see, where was the 11th? Okay, the 11th is here. Okay, this is the one that she's looking at. Okay, so head and shoulders formation. We got shoulder, we got head, we got shoulder, And as you can see, this is the head and shoulders formation that she's looking at. Now, if you drop this down to the 15-minute time frame, you will get to see this a lot clearer. Now, I believe we had some high impact news around this time. Okay, so look at this. Now you can see the pattern a bit clearer. So you need to understand how to maneuver your time frames so that you can see your candles better, so that you can read the price action. You can't just look at an instrument in just one time frame and expect to see everything as clear as day. Okay? You need to be able to maneuver in between the time frames to be able to read what's actually happening. Now, let's focus on the right shoulder, because the right shoulder is the most important shoulder. Okay? This is the one that's going to hint to us what we can expect. So let me just, this is the low of the right shoulder. And this was the first high that it created. And you can see we have one leg up. We got 1, 2, 3. Let me just try to draw that in for you. I'll use WXY. We got W, 1, 2, 3. We got X, and we got Y. So this is typically 3, 3, 5, right? So we can look at that as 3, 3, 5. Then over here, we have, this is most likely a combination 3-wave. Let's see here, 1, 2, 3, X, 1, 2, 3. So this is a 3-wave move up, 3-wave move down, most likely a 5-wave move up. You can see by just the strength of this wave to the upside. Let's change the color so it doesn't get you confused. So you can see that we had, let me just bring this to the front. You can see here that we had a 3-wave correction, and this would be considered a flat pattern. Can someone tell me what flat pattern this is? Who can remember what flat pattern this is? All right, Kevin says expanded, and that is correct. It is an expanded flat pattern. And because this is an expanded flat pattern, if our shoulder was completed over here, and we looked at that as our shoulder, right? Because you can see this could have been considered our shoulder, and we had a stop just above that high. Price spiked down. Some of us are not waiting for the close below, and some of us are jumping in. So if you did not wait for the close below and you jumped in, you would have entered your trade down here, pulled back, you got stopped out, then it went down in your favor, because it's building a flat pattern formation. So it's always good to at least let the pattern formations complete themselves before you jump into a trade. Okay? So here we got an expanded flat pattern as our right shoulder, and we're only going to get that nice down move after that right shoulder is complete. Okay? And it will be completed with a complete pattern formation. It's not going to be complete with just one wave. Now, if we were to go back to the 1-hour time frame, great. So now you can see that if we're using our head and shoulders projection for a profit target, this would be our profit target right here. You can see that we did reach our profit target, but we have 1 wave, 2, this is 3, and we're getting, let's see here, this looks like 4, and this is 5. Okay, so we have a nice 5-wave move to the downside, and because we have a nice 5-wave move to the downside, I'll look at this as my first impulse. Okay, if I'm to draw this in, I can label this as 5. Go 1, 2, 3, 4, 5. Okay, so this could be our 5-wave move to the downside. Let's make it a bit bigger. Great. So this could be our 5-wave move to the downside. And this here, what's building now, could just be our correction. What could this correction possibly look like? Let's see here. I'm thinking this could be 1. This is 2. We got this wave, this wave, this wave, and then we move down. That's what I'm thinking we could expect. Something like a flag, but it's actually going to be a flat pattern correction. Okay, so this is potentially what I'm looking at. I'm going to expect something that looks like this. It's a bit too early to say exactly what it could be, but from the looks of it, I can already assume what it's going to look like. Okay, because I understand the Elliott wave formations. I can already start piecing them together like a puzzle from just the way the price action is shaped. Okay, yes, it can change, but it doesn't change that much. And it would not necessarily mean that the price is not going to go down. Once it creates a correction, we are most likely going to head to the downside. Okay, so it's good to understand the Elliott wave formations because they will help you a great deal when you're looking at trading head and shoulders formations. And basically any formation that you're trading, if you understand the Elliott wave corrective formations, it will help you a great deal. Does anyone have any other head and shoulders that they'd like me to take a look at? I think I see Kevin is asking me to look at pound Australian dollar. Let me see here. Kevin says, I am trading a head and shoulders pattern on pound AUD 1 hour. Okay, Kevin sent me a link. Let's open that link. Let's see what it looks like. Okay, this is nice. I like this. This is pretty. And this one looks like it's falling in line with that ranging type move that I told you guys about. Let's go look at that. Very good, very good. Pound AUD. Okay. Oops. So there we have it. We have the pound Australian dollar. Let's drop to the 15-minute time frame. Let's take a better look at this type of price action that we have going on here. If it's too jumbled up, just stretch it out on a slightly lower time frame so that you can have a better view of what's happening. Okay? So we know already that we have an impulse up. So we have an impulse up. We got 1, 2, 3. All right, so this could be a complete correction by itself. And this could be, let's see here. All right, so this is 3, and this is most likely 5. So this could be, we got W, X, and we got Y. Okay, so this is a complete correction here, and this is a strong move up. You can see this. So this is an impulse. So this could be the final wave up, the final impulsive wave to the upside. Okay, so our head came at this high because that is the highest point. Let's draw in our head and shoulders formation. We can take it from down here. This is our shoulder. This is our head. And a lot of traders would look at this as the next shoulder right here, because as you can see, it did not break the high. Okay, so this is the next shoulder here. It did not break the high. And we're coming down. Okay, So some traders would look at it like that, whilst other traders may want to look at it more like this. But this would be the best way to look at it because this high did not break the head's high. Okay, so this would be the correct shoulder. And as you can see here, the price is coming down. This is an aggressive move to the upside. So you have to be careful with this. Because this right shoulder was built off of an aggressive move to the upside, you need to wait for a proper correction. So the price is coming down. It could be simply just making a correction for more upside. Okay, so this is the last impulse, and it could be coming down in 3 waves and going back to the upside. We have 1, we have 2, we have 3. Let me just show you guys how I'm looking at this. Looking at this is 1, this is 2, this is 1, 2, 3, 4, 5. This is my wave 3, and I'm potentially now in my wave 4, right? Because this wave is too sharp, it can't be a wave 4. So this could be the first wave of wave 4. This is 1, 2, 3. I get one more up, and then my wave 4 will be complete, so I can go for wave 5. Okay, let me just try to draw this in for you. So this will be 1. This is 1, 2, 3. We get one more wave to complete our wave 4, and then we get our wave 5 coming down. Wave 5 and wave 1 are typically the same length, right? So I can use that as a projection to give me an idea where this wave should end, right? So this head and shoulders pattern could take a while before it actually gives you a move because this pattern is not yet complete. When this pattern completes at this level, we could get one more wave down. That next wave down is going to be our final wave of this 5-wave move to the downside. So after this wave to the downside completes, you're going to have to expect a correction. So we could get a deeper correction yet again. And I'm just forecasting this type of zigzag 3-wave formation. And then we could take it to the downside once more. And this next wave is what we're going to expect to be aggressive to the downside. Why? Because it's going to be a wave 3. And wave 3 is generally the longest wave. This is a wave 3 here. This is 1, this is 2, this is a wave 3. This is a long, aggressive wave. Okay? So a bigger wave 3 is expected over here to be a long, aggressive wave. Wave 3 is typically the extended wave. Okay? The longest of the 5. So we can expect potentially a wave 3 coming here, and this could take us a great distance to the downside. If we were to project our profit target based on the head and shoulders formation, it should look something like this, right? And you can use it as your first target. This could be your first target, target 1. When you reach target 1, you look for a correction. If you get a correction, you look to sell off the completion of that correction again, because you're going to be in wave 3. So this might just be wave 1, this might be wave 2. You go again, you get a nice long move that will complete a wave 3 of wave 3. You get another correction, and then you get the 5th wave. Okay? The best wave to be trading is wave 3. Wave 3 is always the best wave because it's generally the longest wave. Okay? So I know, as you guys can see here, the price is moving to the upside. So this is going to complete soon. So as it completes, you can now look to take a nice trade off that. And what can you do to project that wave? You can project that wave using market geometry. Let me just bring it in for you guys. Measure this, and we project it over here. Right? So that wave is expected to end somewhere right in that area. That's where we're expecting this wave to end. Okay, it could end sooner because we do have truncated waves in the market, which is where we get a short wave. So it could end sooner, but what we're looking for is it to end right around this measured move. If it completes at the measured move, wonderful. We can look to take it to the downside to complete wave 5. Okay, and when it completes wave 5, if it stops in this area, does not go longer, then we will expect to get a correction and then sell again. Okay. Any other questions, guys? Anything you guys would like me to take a look at? I'm just loving this type of flag type move that's coming here. If you guys look at it, you can see that it's a nice flag type formation that is being formed. Right? As you can see, it's a nice flag formation that's been formed here. And these types of formations are typically the ones that give you a very strong move to the downside. Okay, this one is happening in what looks like a wave 4. So wave 5 is generally the length of wave 1, so we're not going to expect that very strong move, but we're going to expect a correction after wave 5. And that correction is what's going to bring in that strong wave 3. All right, any questions, anyone? You guys are all good? You guys are all set? Is there anything that you're not too clear on as it relates to the head and shoulders formation? Just let me know in the chat box. Don't be afraid. Go ahead, drop your comments, ask your questions. All right, so I'll assume you guys are all set. No one has any questions. Everyone seems to be all good. Okay, wonderful, wonderful. I see Mark has a question. Mark says, how much does the time frame play a role in this? The time frame is very important. For example, right now I'm on the 15-minute time frame. The 15-minute time frame allows me to see when the price is moving slow. So when the price is moving slow and I drop to the 15-minute time frame, it allows me to see the type of price action that's going on. If I go to the 1 hour time frame, it gets more jumbled, right? Let me just take off. As you can see, it gets more jumbled. I go to 4 hour, it gets more jumbled. So it becomes more unclear the higher we go, what we can expect, right? It becomes more unclear. As you can see here, you cannot tell that you're expecting a move down because it's not very clear. And as you can see, it just gets worse, right? So the higher the time frame that you go on, you're looking at a bigger pattern formation. The lower the time frame that you go on, you're able to trade smaller moves, intraday moves, as you can see here. So if you're a day trader, I think the best time frame to trade on is the 1 hour time frame. You can also do some analysis on the 15 minutes, but you're looking at trading off the 1 hour time frame. Okay, so this one is hinting downside. right, anyone else? Okay, Mark says, I see. Mark says, I normally look at the 1 hour and the daily time frame. Okay, wonderful, wonderful. If you want to do some in-depth analysis to predict where the price is going to go, you need to make sure that if it's not clear on the 1 hour time frame, you drop down to a lower time frame so that you can analyze what's happening inside of the price action. Okay, you need to be able to analyze what's happening. If you're not able to analyze what's happening, you're going to get left in the dust. Mark says, gotcha. Okay. All right. Okay, guys. Thank you so much. It was indeed a pleasure having you guys yet again. I will see you guys on our next class. Okay. Mark says, thanks. You're most welcome, Mark. Bye, everyone. It was a pleasure having you. Bye-bye for now. All right. I see Grace says, thank you. You're most welcome, Grace. You're most welcome, Bella. Bye, everyone. Bye, Rashonda. Have a great night as well, Grace. Bye-bye.